Hello and welcome to Trading Price Patterns. I'm standing in the stead for Barbara Armstrong, who's actually on the beach of Maui, probably getting sand stuck between her toes. Got to have a little fun with Barbara, but I'm teaching her class here today. This is an ongoing class. Each week we meet on this topic of trading price patterns. So we welcome all of you here today. Now, just real quick, we have Michael Fairborn in the chat, and we welcome him. And also, you can find myself or Mike Fairborn on X, and there is our handles right on X. And also, just a quick reminder as we get started, I want to give us some important information. So our examples here today will be stocks and options based. Remember that options carry a high level of risk and are not suitable for all investors. The information is provided for general informational purposes only. And this webcast discusses technical analysis, but there's other approaches, including fundamental analysis, that may assert some different views. Also understand, Schwab does not recommend the use of technical analysis as a sole means of research. We try to use fundamentals, macro, intermarket to complement or support what we're seeing technically. Also remember that investing involves risk, including loss of principal. Now, also remember, when we talk about our agenda here today, number one is I want to talk about really the price patterns, okay, and trend types. I think a lot of times we just throw around terms like price patterns, but we really kind of don't know where they fit. I want to talk about that here today. I want to talk about drawing the lines of support and resistance with those price patterns. And then really also with that is order types. The order types that you want to be familiar with if you're going to be using price patterns. And then we'll talk about some examples that could be bullish or bearish. Now, if I were to ask you a question, okay, and that question is to you, what is your favorite price pattern? What would you say? Okay, so type that in just real quick. So first off, the link that I just sent you is going to get you to this page. If you went to youtube.com, just general, and you typed in Trader Talks Schwab Coaching, it's going to get you to this page. It's a free, we have a channel on YouTube and you're on it. And if you have not subscribed yet, you can just go right to the middle of the page, which on the link I sent you, and just click on subscribe. Subscribe does not mean that you paid for it. You're just following the information, and anything that you subscribe to or are following is on the left-hand side. So quick note there. Now, I want to also kind of just make sure is if you do not have the information regarding, okay, our coaching schedule, the link I sent to you will take you to this page, and you'll see it will say live webcast and virtual workshops. Click on that, and this is going to get you to a schedule. And you want to make sure when you look at the schedule, okay, you're going to see that here we are, more events, and there we are right there, trading price patterns, okay? So just make sure you kind of close that down, and it's going to show you the whole schedule, okay? You can also pick the coaches, whoever you want to follow or listen to, trading, what type of products, okay, what type of skill level, and then also, etc., what type of strategies or series, I should say, okay? So some great information right at your fingertips. Now, I want to also go back to the question I just asked. What's your favorite price pattern, okay? And I'm going to write those down here in just a moment. But if we kind of said, what is the purpose of price patterns, okay? And let me kind of back off for just a sec. What type of products could we use it on? Well, the thing is, we could use it for stocks. It could be used, let's say, for options in general, like trading options. It could be an industry group. It could be a sector. We could use it on a sector if we wanted to. It could be a commodity, okay? It could be a future. It could be, for crying out loud, Forex, okay? And so if we ask that question, like, well, what time frame? Is it only on a certain time frame? No, it could be used intraday. Not saying we're going to do that, but it could. Daily. It could also be used on a weekly chart, a monthly chart, okay? It could be used also, let's say, if you like to just say, I'm going to invest quarterly. So price patterns really has a lot of latitude, okay, as far as what we're going to use it on. So if you like to trade stocks, we'll see it a lot. If you like to trade leverage or some type of option strategy, price patterns, okay? If you say I like to buy or sell sectors or futures or commodities or whatever it is or Forex, price patterns, okay? So if you're more of a stock investor or you like to trade futures, you're probably going to be using price patterns. Now, we kind of said, what are the two main purposes of these price patterns? I think the biggest thing is we're trying to, these price patterns, okay, the price patterns create support and resistance levels, okay? They create support and resistance level, and investors, and I'm just going to say here, traders are trading the breakouts, okay, or down. Okay, so when I say this, we're really saying that it could be a breakout trade or a breakdown trade, a bearish trade. So when we look at a lot of price patterns, those patterns of price create support and resistance levels. So being able to draw the support and resistance levels with price patterns, critical, okay? You got to have confidence in how you draw the line because that might trigger your entry to get in. Now, what else are we actually using the price patterns for? What else are we using them for? And that answer might be measuring potential targets based off the pattern itself. Pattern of price itself. Okay? So those are kind of the two main purposes we see here. We kind of go back, move that off so we can see that. So that's, if someone asks me, what do you get out of price patterns? I'm looking at support and resistance levels. We break to the upside, break out. We break to the downside, break down. So if someone said to me, price patterns are what? They're breakout trades, okay? Or you could say continuation up or continuation down. If we actually said price pattern, what else could we use it for? I'm going to use that pattern of the price to measure where we think the price could go up to or fall down to. Now, if we simply made a list, okay, like a sample list, just briefly, and said, well, what type of patterns are your favorite? Well, I kind of put on my list channels. Now, these channels could really be horizontal, and I'm going to say H, or they could be diagonal, okay? So you could have kind of like a sideways channel, a price range, in other words, or it could also be diagonal. Now, obviously, when we say price patterns, we would say bull flag, okay? We'd say bear flag. We'd say W patterns, which we've talked quite a bit about. I am going to include M patterns. Stay tuned. And also, if you look at this, I'm going to put ascending triangle, okay? Descending triangle, symmetrical triangle, okay? Now, there's going to be a reason why we're writing these out. So this is not just a typing class. Bullish MACD divergence, bearish MACD divergence, okay? Head and shoulders. Anybody write that down? So I'm going to put little head, and we're not talking about the shampoo. I thought it was a joke the first time I heard, wait, that's the shampoo. Okay, now inverse, okay, head and shoulder. Head and shoulder. V pattern, okay? What are we missing? Tell me what we're missing. Yes, yours truly, cup and handle patterns. Some might call it a saucer. We'll keep it cup and handle. And the last one I kind of put here is, and actually that was it. That's what I have. Did I miss anything? I don't think I did. Now, I want to kind of come over here to the right-hand side, okay? Because if I just threw this list out and said, hey, you can go to the online course and learn about all these different patterns. The problem is we don't know when we're likely going to see these patterns. That's kind of the problem with it, okay? So what I want to do just real quick before we get into trade examples is I want to kind of refer to kind of like looking at different types of trends. Now, we label those different type of trends, and I'll do this quickly. 1, 2, 3, 4, 5, okay? And what we're doing is we're looking at where price is in relationship, okay, to moving average, okay? Now, if we said, for example, 1, now there's a purpose of us writing it down because we're going to kind of link it to what we've already talked about or wrote down. So if I said trend number 1, that is the price below both moving averages, okay? And that, when we say that, the both moving averages, we're talking about the 10, okay? And I'm going to put 10 or 20, You might say, James, I like to use a 30-period moving average. I'm going to talk about more about that moving average in just a moment. But the biggest actually thing is here is the moral of the story, it's below both moving averages. Price below both. Okay? Now, this is kind of like a little in-class quiz. Okay? I want you to be thinking about our list and think about where those price patterns would be in the different trend types. Okay? Now, if I said, let's say trend 2, we're talking about price above 10-day moving average. I'll put MA, but not above the 20 or 30. Okay? Now, I want to kind of highlight this. We're using the 10 for a momentum, MA, and the 20 or 30, whatever you prefer, for trend. Okay? That's the purpose there. Okay? Now, in our examples, we'll see more of that. Now, if we kind of said price on the 3, price above the 10 and the 20 or 30, whatever you prefer. Okay? Now, I want to kind of go back to that question. Think about where these fit in relationship to the trend type. Okay? Because when we actually pull up a list, if we see a whole bunch of stocks in trend 3, there's probably going to be certain price patterns that we're going to see on the chart. If I went to trend 1, what type of price patterns are we going to see in trend 1? Okay? Now, what I want to do is let me kind of move this down for just a moment. Only got 2 more, and then we're just going to connect the dots, and we're going to go trade. Okay? But this is an important understanding because it's not just kind of random. This is price above the 10, 20, or 30, whatever you prefer, nearing resistance. Okay? So that's a major thing. Think about what type of price pattern has where the price has been up, but it's now starting to near resistance. Okay? Now also, if we look at 5, this is price below 10, okay, but still above 20 or 30. Okay? Let me kind of just put 2 notes here, okay? So one of the notes I want to write down here, really the 2 is a bullish diagonal breakout, okay? 5 is a bearish diagonal, okay, breakdown. So this is, the 5 is losing momentum. The 2, okay, 2 and 5 is our opposite, is really gaining momentum. All right. Now, let's just kind of bring this together now, okay? Since we kind of have some basic definitions now, we have price patterns, we have trend types, and what I want to do now is I want to just connect the dots. And then we're going to look at trades with the dots connected. So if I were to ask you, what trend type, okay? What type of trend? Now, if I said to you, now, by the way, this is an open book. This is an open discussion here, okay? So if I said to you, hey, channels, horizontal or diagonal, what type of trends are we going to see that in? That is, any. Because you could actually have something where it has been falling down, created a sideways channel, basing, okay? Or something that has been going up and consolidating. You can get any type of trend on that. It's a consolidation. Now, if it's more diagonal, that's probably going to tell us it's more probably trend type 3 to 4. If it's diagonal, and I'll put that there. If it's diagonal, okay? Now, if I said bull flag, what type of trend type are we probably going to be using? Well, or seeing that on. Well, we probably say, well, what type, when do you see bull flags? You tend to see bull flags when the price is above the shorter term and longer term moving average. So we're just going to put trend 3 right there. Now, I'm going to say 2 earliest to 3, okay? Now, when you see bear flags, and bear flags is price falling down, some of you might say, let me just kind of be 100% clear, okay? So when I say channel, we're talking about sideways ranges or diagonal upward channels like that, or even downward channels. I'll draw those, okay? So when I say bull flag, we're talking about where the price runs up, makes a higher high, pulls back, okay? And we start to bounce back to the upside. A bull flag is really higher highs and higher lows. Bear flags are really lower lows and lower highs, okay? Bearish trends. That's what we mean by that, okay? Now, we kind of finished this and said bear flag. When do you tend to see those? You tend to see those in trend 5 and 1, okay? Now, let's fill this out. When do you see W patterns? Well, you tend to see W patterns in 1, 2, and 3. 1 means you have been selling off. 2, the price starts to get above the short-term moving average. And 3, because the stock might be starting to really make a higher high. What about 5? Now, when you kind of think about, if you said, James, I don't really know what an M pattern is. You ever seen a price run up, pull back, run up to the prior high, and fail? And what it does is it falls back down, and instead of holding the higher low, it falls down and reverses course. Have you ever seen that before? That's what we mean by an M pattern. Is that a good pattern or a bad pattern? Bad, okay? Some technicians say it's a murder pattern, technically. That seems a little aggressive, but let's just call it an M pattern, okay? What type of trend do we tend to see that in? We'd say it's 4, 5, and 1, okay? Because number 1 is we're starting to form a resistance, and then we're losing momentum, and then the price falls down. It tends to fall down aggressively. What about ascending triangle? Well, you probably see that in 3 and 4. Okay, consolidation, in other words. Okay, you're kind of creating a range of tops that create resistance. Descending triangle. You're probably going to be in a lot of 1 and 2 back down to 1. Because that ascending triangle, you have an upward diagonal line. Okay, you have an upward, like you're getting the price to go up and down, right? The descending triangle, if the price does go up, it doesn't go up for very long. Okay, so that's the bad part about that. Now, if I said symmetrical triangle, when you're probably going to see a symmetrical triangle, I would still say it's going to be more in 3 and 4 because a lot of symmetrical triangles, you tend to be coming off an upward trend. Bullish MACD divergence, when do you tend to see those? For sure, number 1 to 2. Bearish MACD divergence, when do you tend to see that? For sure, number 4 and 5 tend to be. Now, I'm going to, and also when you look at head and shoulders, very much like an M pattern, we would say 4, 5, and 1. Inverse head and shoulders, we would say 1 and 2, maybe 3. B pattern, for sure, number 1 and 2. And cup and handle, you're really in trend 3 and 4. Okay? Now, I want to kind of connect this all. I have never made a list with you on price patterns. I've talked about this, but I've never really connected when do you see the price patterns with the trend types. Okay? Now, I don't want you to think that, my gosh, I mean, I have to remember the trend. No, look, welcome to the class, okay? So when we pull up, let's say, a market watch list, we can see what type of trend we have. So if I were to pull up, let's say, I go to the market watch, bring up the Dow Jones, and I say, hey, here's what I got. I see in the Dow Jones a lot of number 1s. So immediately we know, are we probably going to see a whole lot of bull flags? Probably not, okay? Because bull flags are more in trend 2, 3-ish. If we saw, for example, stocks that were maybe starting to do diagonal breakouts, etc., there's some 2s, there's some 3s, and there we have 5, okay? So if we kind of said, well, what type of price patterns are we going to find if we see a lot of trends of number 1? Well, bearish type of price patterns, okay? Now, are there any questions with this? Okay? Now, let me send this out to you. We have some guests with us here today, and some of you are frequent attenders. We welcome you back to the class. Some of you are like, no, I'm brand new. This is the first time I've been here. We welcome you, okay? Now, I sent in the chat a link, And what that's going to do is we're going to go to the very top right on the Thinkorswim platform, go to Setup, Open Shared Item. Okay? Now, all I got to do is take what's in the chat, okay? And I'll send it out again and just copy and paste. Okay? And that's what I'm doing now, M Street Fortune. Okay? And I'm going to put that right back in. Okay? So it's the same link, okay? But I just put it in the twice so you can see it, okay? So all we did there is go up to the very top right, set up, open shared item, click, okay? Set up, open shared item, okay? And then just copy and paste. What do we do next? Well, let's preview it, okay? What do we do next? We'll just import the item and we're just going to call it trend type, okay? Now, or you could just call it trend like I did, okay? Either way, fine. We're going to import this. So on any of these column headings now we have in this case, I'm just answering this question, we could right click on any of the headings. Right click, edit formula, or excuse me, customize, okay? What are we customizing? We're customizing the column headings, okay? And if I typed in trend type, which is what we called it, you're going to see it right there. And we could just add that to the current vertical column headings. That's all it is, okay? Now, what I want to do is I want to go over just real quick a couple examples. Now, remember I kind of said that price patterns could be used, whether we're talking about stocks, options, a group of stocks, industry groups, sectors, futures, forex, all the above, different time frames and so on. Now, what I'm going to do is I'm going to bring up a couple stocks and I'm going to test you. Now, if I said to you, so for a while in the Dow Jones, we had really kind of more like an upward channel, right? Higher lows, okay? Higher highs, had an upward channel. If I said this is the Dow Jones, what type of trend or price pattern, excuse me, do you see on the chart? What would you say? Bullish? Would you say like an ascending triangle? Or would you say a descending triangle? Well, if you got equal lows, you got lower highs, that's a descending triangle. Remember, we kind of said one of the purposes of kind of price patterns was to measure maybe a potential target. Now remember, if we got lower highs, lower highs, lower highs, every time we rally, the price can't get up as high, we might kind of take kind of where from the support is to, let's say, where the resistance is and measure that width. Now, if we did that, that's $10.50. Now, if we say, look, would we be surprised if the trend were going to fall down? Well, not necessarily in a descending triangle, okay? Every time the bulls have been trying to get a rally, they can't hold it for long before sellers come in and push it back down again, okay? So if we said what might be the potential target for the Dow Jones, we kind of might say, look, it wouldn't surprise us at all if we went to 412, okay? So just an example given. Now I'm going to fast fire through a couple that I kind of was looking at this morning as an example. Now, number one is if I take also a look at what type of price pattern do we see on this? Now, we're not trading this. I just want to show you different price patterns for different types of products. If I kind of said price pattern on this, higher lows, lower highs. What do you call that? That's kind of like your symmetrical triangle. Not as much horizontal resistance as we have in terms of diagonal. And notice how we're drawing the lines, maybe over the last 1, 2, 3, 4, 5 weeks or so, and just connecting or touching the bodies of the candles. Why bodies? Okay. Just because we're where you have more touch points, okay? Wicks could have been there for a second or two. Price could have been there for just a couple seconds, minutes, and then faded back down. So we're trying not to draw lines from statistical outliers. We're trying to get more of the distribution of price, okay? Fairborn likes that. Good. Now, what I'm going to do is let me kind of show you a different one. What about the U.S. dollar, okay? Now, quick heads up here tomorrow because our president, Jimmy Carter, passed away. Equity markets will be closed tomorrow. Currency markets, though, spot markets will be open, okay? Now, if I said, what type of price pattern do you see on this? We might say, James, I see a little run up in the price, a little pullback, little run up in the price, pullback, okay, a little run up in the price. So we might kind of say that, James, on maybe of the US dollar, there might have even also been like a little cup and a little pullback and maybe a little handle. And I wouldn't argue with you on that, okay? You're probably right. And then it ran up again and so on. So if we kind of get an upward trend, those bull flags are probably going to be laced all over the chart if there's an upward trend, okay? Now, let's kind of go into, let's say, last one on this. We'll talk about all stocks. If we said, well, what about gold? Is there any price pattern on gold? Now, it's okay to say no. Is every time we see, let's say, a ticker symbol, is it always going to have a price pattern on this or on the chart that we bring up? And if someone said, do you see the price pattern? I'd be like, I see a whole lot of sideways, maybe a channel, but nothing really clear and crisp. So it's okay. So every time we pull up a chart, it's not going to have a clear price pattern. That's okay. Okay? And that's why I wanted to bring up, let's say, gold in this case. I mean, I would say at best, I might say sideways range, but you're going to kind of see it's been a little sloppy. Not a whole lot of permanent, like a lot of touches at key levels on the top or the bottom. It's kind of very sideways. Nothing that really seems definitive in terms of support and resistance. That's okay. Sometimes you're going to see that. That's why we go to the next chart. Now, speaking of the next chart, so we spent some time really talking about, let's kind of just recap what we talked about so far. So number one, we talked about different price bands. These are probably the key ones that many technicians, whether they're stock traders, option traders, whatever, they're probably using. We want to know what type of trends we're going to see those in. So if I'm looking at a market or a sector that's in trend 3, then I know I'm probably going to see a lot of bull flags, a lot of ascending triangles, a lot of symmetricals, probably a lot of, for example, cup and handles continuation patterns. I want to know where I'm going to see it, so when I do see it, I can have some confidence, the investor says, to trade that, okay? And it's not surprising for them, okay? Connecting the dots here. Now, I want to bring up an example here, okay? So one of them, if I looked at, let's say, AXP, what type of price pattern would you say on AXP? Any type of price pattern? Now, let's do a trade on this, okay? So what I'm going to do is I'm just going to go back and draw support and resistance. Now, I think if we kind of all kind of said, hey, let me draw, okay? I think a lot of us might kind of draw a line about right there, okay? Maybe where we kind of had some touches. I think if I said draw a diagonal line, we might say in this case, okay, I'm going to draw back and I'm going to kind of try to touch some lows. And some of these lows, if I kind of try to get a recent area of where have the lows been, we probably have some diagonal support, okay, right about here. Now, one of the things I just want to make sure you are 100% clear on, okay? So great. Wonder if I could see the price pattern. What type of price pattern is this? I think many of us might say, James, it kind of seems more like an ascending triangle, okay? Now, I'll be honest, okay? And I'm just an honest person. I grew up in New York, and to me, I just got to say, okay, so now that we know that, what is the point, okay? So if we see a stock that, for example, is making higher lows, and if this stock we're going to break out of resistance, there's a couple ways we could do this. Manually, I'm just going to watch it. I can manually watch a lot of things. So could you. Second, the order types that we want to be aware of is, number one, an alert, okay? An alert is, think of it like an alarm clock. Alert, okay? That's one way. You could just say price above X level. And it just sends you an alert, shoots you an email, sends a text, pops up on the platform, and so on. That's one way you could do it. Now, some of us, we like to say, look, if this were going to break out to the upside, buy, stop, order, okay? This is saying buy
if the price gets above X level. Now, X level is whatever, if you said, James, I want the platform to buy the stock example given if we get above 304.39. Okay? So if you get above 304.39, it buys it. A buy stop order is a market order. So if that stock goes to, say, shoots to 305, it's going to try to fill as soon as possible. The risk of that order is that there's no cap on what it can buy for. Okay, so a lot of people say, geez, that kind of takes my breath away when you say that, okay? It kind of seems like, in essence, like a blank check, okay? Not really, I don't like that. So I'm going to put buy stop limit. So I'm going to put same as buy stop, but the limit caps the max purchase price, okay? So many investors might say, I like the buy stop, but the buy stop limit places a cap on what we're willing to buy it for, okay? Now, by the way, on these orders, they could be day orders, okay? They could be GTC, good till canceled, orders. They could also be, as I'll talk about tomorrow, EXT orders, extended hours, okay? Now, what I'm going to do here is I'm going to do an example trade on this, given what we just talked about. So if you're trading price patterns, you're probably wanting to say, I want to get really good at setting alerts. If the price were to breach out of the line of resistance, you want to be very good about having, which one of these are you comfortable with? Do you like to do a buy stop? Do you prefer to do a buy stop limit, and so on? In our example, I'm going to show a buy stop limit, okay? So what I'm going to do in this case is I'm going to set up an order to buy. I'm going to right click on the chart. Okay, not too bad. Right click on the chart, go down to where it says buy custom, and I'm just going to go to where it says with OCO bracket, okay? So down at the bottom now, stock buy, we don't have to do 100, it's defaulted to that. And what I'm going to do is I'm going to go to here's the price, limit, and I'm just going to go back to what we just said, a stop limit, okay? So we're buying American Express if the stock goes at or above, let's say, example given 305, okay? So that's the trigger. If we go above 305, trigger an entry to get in. Now, this line right above us is the cap, the limit. What are you willing to buy it up to? You could think of this like an auction. Hey, I'm not willing to buy more than, that item for 50 bucks. Okay? Not willing to pay more 52, 53, whatever. You place the limit. Now, I'm going to put right here, let's say I said the max we're willing to buy it is at 306. Okay? So the wider that range is between the stop and the limit, well, the greater the chance you probably have to get filled. The key is the price has to go above this price level to trigger the entry, but the fill, what it buys it at, cannot be any more than this. How does this relate to price patterns? Well, I'm telling you, if you start getting a whole lot of breakups or breaks down and you don't know order types, good luck, okay? That means you're going to have to be watching the market, okay, manually, and not using technology to try to help you track things. So some people like to say alert, and I'll hit that in just a moment. Now, target-wise, I'm going to go GTC, stop, GTC. Now remember, the target and the stop, they're not valid until the order is purchased. Underneath here, I'm just going to put a stop underneath 297.34. The purpose of this class here today is not talking about stops, but I'm going to put a stop less 2%, and I'm going to set it at 291.39. That's just below the diagonal line, okay? Now, what I'm also going to do is kind of put a target here. Now, what you're going to notice is we kind of have this channel here, I should say the diagonal line. We have a horizontal line. And what some investors will do is they'll measure the distance between the diagonal and the horizontal, okay? Now, if you look at this and say, look, if we were to break out, this distance there is about $17. If I did this distance right here, it's about $14. If I did this distance right here where there was a more recent touch, it's about $12. Now, obviously, we're taking the width from the support level to the resistance and adding that measurement on top of resistance. So if we said, look, the resistance is at 304 and I add $12 to it, well, it would be 316. Okay. Now, if we take a look at this, I'm going to put 316. Okay. Now, do we have to buy 100 shares of stock? No. For our example, let's say we only buy 25 shares of stock, just for an example. Now, if you take a look at this, we're saying, look, buy the stock, and this is good till canceled. Buy the stock if it gets above 305. The limit which you're allowed to buy it at is up to 306, but not more. Now, the risk of that is, wonder if it just gaps to 306 and keeps running. Doesn't fill, shouldn't fill, okay? Target 316, 291.39. Now, got to tell you something that happened to me one time. I was talking to this individual. He goes, if enough people know about this, could this become like the law of self-fulfilling prophecy? Thoughts on that? If many people are thinking that they see the same pattern, they see the same lines of support and resistance, they measure the same targets, okay? Could it become kind of like other investors are thinking the same thing and trying to do a similar type of trade? And the answer is yes, okay? Just like if we all thought the stock market was going to be strong, we buy U.S. market equities, and we think they're going to go up higher. Let's say they do, and the investors try to profit from that. So that's not a bad thing, okay? Or if we thought the market was going to go down, we do a whole bunch of bearish trades, and it goes down, and we try to profit from that. So the answer is yes, okay? Confirm send, and now what you're going to see is there's the order right there, okay? Now, what I'm going to go ahead and do, okay, so Colin got it, exactly. So what we're going to go ahead and do is send that order, okay? Now, a couple other stocks I want us to kind of keep an eye on is Costco, okay? Now, there's two stocks that are kind of, let's say, have fallen down. Now, if you look at this right here, what type of price pattern do you see on this chart? Now, back here, we had a channel, okay? You see it? Kind of more like a defined channel. Do you see anything now? Okay, so that was a channel. All through here, okay? Sideways, equal lows, equal highs. Breaks out, pulls back, runs to the upside. Stop. Wait, what does that look like? Okay? Well, what you're going to now notice is you could maybe say that on the left-hand side, shoulder for S. Okay? Right here, you actually have the head. Now, some of you in the South say we call it melons. Okay? I don't care what you call it. Okay? And then it falls back down again. And then what you're going to notice is on the right-hand side, we see maybe the start of a shoulder. Okay? So the chart that we're looking at is Costco. Okay? So maybe we're starting to kind of see on the right-hand side, maybe another shoulder perhaps forming. Now, so if I looked at this, we had a channel, okay, from there to there. But as of recently, it's kind of been maybe more starting to create a head and shoulder. Now, why would I want to know that? Well, we want to know that because now what we're going to do is we're going to place a bullish trade. Where's the neckline of this trade? Well, the neckline of this trade, if I were to kind of draw it up, it's probably right about there. We ran up, we fell back down, pull back, flag, ran back to the upside. So this right there is really the neckline. Now, some people will say, well, I don't know when to get out. I don't know when to get out. I don't know when to get out. Well, if you do the price pattern, you could probably have an idea of where to consider the exit. If we fall down below 908.86, that's the neckline that's starting to form on Costco. Now, what we're going to do is we're going to trade this. We know that one of the risks of this trade is we could be forming the right shoulder only to curl back down and break that neckline, and then where might it try to go to? Well, the old support was kind of right in this range, right? If we're not able to hold 908, the path of least resistance is when we fall down to the next level. That's not fun, okay? But what are price patterns? They're really support and resistance levels, okay? Or it's a pattern of the price that's creating the support and resistance levels that really give a target measurement. Now, what I'm going to do in this case is we're going to buy example given, okay? We're going to right click on the chart. Now let me do this, okay? Wonder if you said, James, I don't want to get in unless we get above today's high. Fine. Right click on the chart. So by the way, is an alert an entry? No, it's not. It's not a pending entry. It's an alert, okay? It's almost like it's just saying, hey, remind me if we get at or above this price. And then I want to look at it again. Let me just show you this real quick. I think many of you might kind of use that. Right click on the chart of where you want that alert to be, create an alert, and now what it's going to say is mark at or above 932.72. And now what that's really doing is just saying, hey, now I'm going to change this to the current price. Now, when I change it to the current price, I want you to see what it does, okay? So if I say create that, cost, mark is at or above 920. You see how that came up? It will also send me a text. It will also send me an email if you set that up underneath setup and notifications, okay? So that's one I want us to kind of keep an eye on as well. The other one that we're kind of seeing some bullish behavior in as well, little channel so far, is really triple M. Kind of more of a sideways range, right? And then you kind of have this range. Now, many of you know that some in our classes that we do, and I'll show you those in just a moment, we like to look at a lot of channels. Some people like to buy low and sell high, or buy high and sell higher. And sometimes those lines don't always hold, and you break to the upside, you trade the breakout or the breakdown, okay? Now, let me kind of speak to these just real quick, and I want to make sure that you have the resources that you need, okay? So number one, I want to make sure that you know that this is not a one-off class. This is a weekly class that Barbara Armstrong normally teaches, okay? And remember that the link that I'm sending you right now is the schedule, okay, for the month of January. So bookmark that. Second, if you go to this page, which this link that I sent to you, okay, right on, let's say YouTube, okay, make sure that you subscribe. If you've not subscribed, subscribe. Subscribe does not mean you pay. You're just, think of it as you're following the Trader Talks Schwab Coaching webcast. That's all you're doing, okay? Subscribe, not paying. You're just following the information. Second, or I should say third, the in-person events, okay? Some of you say, James, I like kind of learning online, but is there also like a place where I could go and have a live experience, a 1 or 2 day event? Yes. Now, I want to make sure that you're aware that coming up this weekend, we're going to be in San Diego on Friday and Saturday. I want you to notice that after that, Seattle, okay, doing technical analysis and option strategy workshops. And you're going to see going to Atlanta, go Dogs, okay, all about the Dogs. Scottsdale, Chicago, Detroit. And what you're going to notice is, if I scroll down, you're going to notice that this is for the entire year. New York, DC, Orlando, okay, Miami, and it's all the way down there. Do not just blow over that page. It's kind of really important because if you'd like to plan out ahead of time, you could see all those for the whole entire year. Now, also a quick reminder that you could follow myself, James Boyd, on X, okay? And also you can follow Mike on X as we post throughout the week. And so Mike Fairborn's page, let me send that link, is right there, okay? Now, the comment says, when are we coming to Maldives? Don't think we have that one yet, but I can pass that along. Now, I'm out of my time here today. I want to thank you so much for your comments and your participation. The biggest takeaway, what I want you to kind of have more confidence in, is what type of price patterns, what type of trends do those typically go in to have more confidence to trade those setups. Okay. This would also be a really good class to go back and kind of review to really make sure that you're comfortable with the material that was presented. Okay. And think of it as, could you teach it? Could you teach portions of it and feel pretty strong about it? Okay. Now, also remember that what we talked about here today was done for example, illustrative purposes only. Stay tuned for our next webcast coming right up at the top of the hour. I'll be back at 4 p.m. Eastern to talk about growth, value, and income. And this has been the class on trading price patterns. Thank you so much. Thank you, Mike Fairborn. And again, thanks to all of you. And make sure you take advantage of those resources that I shared with you. And stay tuned for our next webcast at the top of the hour. Bye-bye.